Good morning, everyone. We are potentially at a very important turning point in the market, which I'll discuss in detail. But first, wishing all of you a happy new year. What you're looking at is a chart of the BSE small cap index. Starting from the August low, it's possible to count this index into 5 waves as I've shown, and it's potentially in the final fifth wave, and it's been extending for the last couple of days, closing higher, and has been around 0.8% high intraday today. So essentially what we are looking for, and as I've been writing in the last couple of days, is that we're looking for a reversal in breadth, or a reversal in this index itself, which would give you a sign that the move is over and that you have completed an entire 5 wave, which has lasted for 4 months, and should be looking for a meaningful correction of that move. The RSI of the index itself is currently running into the 80s. It's reaching around 83 today. But the next question that will arise is that are we in a bigger run up, because we are looking at an impulse, and is this the start of something? I think the answer to that will really come from the correction itself. When you've gotten this overbought, if the correction itself shows signs that it's a halt or a consolidation, then only would you start looking for upside. Otherwise, my sense is that what this impulse is going to be, it's going to be wave C of an overall larger flat structure forming since 2012, which means 2012, which was a three-wave formation, would itself become wave A. This was three waves, okay, and the entire three-wave sell-off into 2013 uh, was also a three-wave structure, which was wave B, and what you have in impulse is essentially wave C. Now, in case of the BSE small cap index, this pattern looks downward slanting, but when we start looking at the BSE mid cap index, then it's much more a flat sideways pattern. So what we are really saying over here is that the sell-off into 2011 from 2010 was one leg down, and it's not. And what I thought at the beginning of 2012 that you'd completed your X wave at that high because of the way that mid caps gave up. But what you've seen is that the Nifty actually outperform and make a new high in 2013, and also complete what I've shown yesterday, the 8 quarter cycle, which means that the entire recovery in the Nifty here was 8 quarters, and this entire period is another 8 quarters, and therefore the Nifty itself, the entire trend is one cycle on the monthly momentum indicators, and the mid cap index has essentially done a larger flat, which you would mark as A, B, and C, and would then become an X wave. So this is the point we are at, where we are completing 5 waves, and in a bearish structure, this 5 waves could be wave C of an ABC, which would complete an X wave, and the setup would then be ready for a larger decline phase within the index and the stocks themselves. This would also coincide with the 8 quarter cycle on the Nifty, which would then end at these highs in wave Z. Which brings us to the daily chart of both the Nifty and mid cap index, and I've put them together as I keep doing during the daily updates. And what I've been showing is that there's a intermarket divergence developing. Now, typically when such divergences develop, and if they are to go wrong, like it happened in September, the Nifty was falling and the mid cap stopped falling, and then it went up. The Nifty itself also tends to rise along with the broader market index, and eventually surpasses, and the divergence goes away. Now we've seen the broad market index running up for several days since the 23rd of December. That's 1, 2, 3, 4, 5, 6, 7 days almost. That it has been making new highs. However, the Nifty has been stuck just below the 6300 mark and a little higher than that in the last couple of days, and the divergence has actually been maintained. So while we can argue, well, it will go away, but the fact is that it is still there, and as long as it's there, it's a warning that we are now at an overstretched stage in the market, and eventually these divergences, when they play out at the end of a move, they amount to a trend reversal. So in any case, it's a warning sign for the immediate trend that has been ongoing, and I believe this is an entire trend because it's one cycle on the broad market index, even though there were several up and down moves in the Nifty, which has net not really advanced as much as the broad index. So we are looking at the fifth wave in the BSE mid cap small cap. We are looking at an intermarket divergence and overbought reading, and we are at the end of 8 quarters. So the next correction here is extremely important in determining whether this rally has legs. The longer term wave structure counts and the time cycles all indicate that it should mark the end of a larger counter trend move and start us into a downward phase. And you would really want to see confirmation that no, the correction is just a correction, and you're starting up again to really get bullish or set higher targets on this market. Otherwise, the view would remain that you're at the end of a counter trend move in wave Z on the Nifty and wave C of an X wave on the broad market, which should lead to many months of a decline ahead. So that's where we are. We've just completed 8 quarters yesterday on the Nifty, and we are at the start of the next time cycle, and this is what we are going to be watching. We're going to be watching these divergences play out, and as they do and they confirm, this would be an opportunity to sell and be on the short side. That's all on this update. Thank you.